And you and other money managers have kind of been playing out different scenarios where this where COVID-19 could land us financially in the market.
I think you're seeing the birth of a brand new bull market. And I think when the numbers come in, everyone's going to conclude that we're in a recession currently. So during the second quarter of the year, when you look at unemployment and all the indicators that are lagging, that the Fed's going to be processing, they're going to conclude this is a recession. But I think it's a very sharp and short-lived recession. And when I look back through history, I'm always able to conclude that recessions have been good times to buy equities. So if you have a little bit longer time horizon, particularly if you're a younger investor, maybe just starting out in a retirement plan, and you have a greater than 10-year time horizon, it's very likely that this is the buy of a lifetime for equities. So my gut feel is that we're getting the sneak peek now of a risk-on environment that will be coming in probably into the third and early fourth quarter. And I would definitely recommend that people take advantage of that. But it remains to be seen what governments are going to do with getting the economy back up and running. Is what we've chosen to do is to buy into the fall, to buy heavily into the March lows. And if you think about that, you really were able to pick up prices that we haven't seen since December of 2018. And so what we've been able to do is relive all the gains that we experienced over the last 2 years. And those positions are now in profit, and our previous positions that we held are coming back into profit. So I know for our investor base, that's been a big source of comfort, is to know that these buys are gonna turn a nice profit moving forward. And I think people understand that this is really the classic exogenous shock to the market, and it's not a financial crisis, is what we had in 2008. And so I think there's a general sense that this too shall pass. And then in the back end of this, it's going to be a blip. You know, I was speaking with a gentleman last night about that very topic, and I said, you know, do you remember 2008? He didn't even remember, and I said, you know, that was a really bad scenario. And now, as you look back, it was just a blip on the chart and the time horizon. And I said, you know, 10 years from now, you're not going to even remember this event. We're going to be worrying about something totally different. And so I think providing that sort of perspective on the situation is really helping investors to stay the course. I think recessions are really good times to buy equities, and there's a risk as people grow in the latter stages of life of becoming too conservative. And so equity growth, you know, capital appreciation is a very needed aspect inside of an asset allocation at all stages of life. And again, seek the advice of your financial advisor, but don't lose sight of those facts.
All right, thank you so much for your expert advice, Lance Williams, Chief Investment Officer at New Song Capital Management. Thank you.
Thank you. Have a great day, Roseanne.
You too.